Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to weekly stock market analysis show where we look at technical charts and then try to understand what happened in the market in the previous week, and also we will look at some strategies in the options and some stock picks. We'll try to analyze and learn from the charts. So let's get into the charts right away. Come back here. So this is a weekly view. We have been talking about that multiple breakouts and the flag 1, 2, 3, like this consolidation breakout. That's what's happening in both indices. Right? It's a rally. Yeah, it's within a trend line channel, moving up, and Nifty has hit the top. Nifty also doing the same. Right? It's a weekly view. Sitting dailies, you can see it's within a parallel channel, trend line channel on Nifty and the Banknifty. The election and the post-election spikes can be seen there. And once again, it has reached and recovered completely. All the euphoria settled down now, and then it has hit the all-time highs and at the very top trend line channel once again on both indices. This is a candlestick view. What you see here on the left side is Nifty weekly candlestick pattern is known as spinning top. Right? It needs to have good volumes also, which it has. But see, spinning top is confirmed only if the price moves below the low of the candle. It's a weekly candle, so it will come to only next week if it is breached or not. It's in the case whether it is confirmed or not. But the moment it is breached in the next week, any day, you can probably expect dangerous downfall. So you have to be cautious about it. It's just a caution, it's not mandatory, it works all the time. But you have to understand that market is heated up, but still there's scope for moving 24,000, but it's already 23,500. It's a very, very top. Heated up, spinning top coming with is to be seen with some caution. It's just a caution, it doesn't mean that but it doesn't mean that it's for sure. Also keep in mind that market formed the spinning top after making a close which is higher than the previous week, and it made it after making a new all-time high this week. Right? Market did move up, but there is profit book that's happening probably. Not probably, definitely. Right? At these levels, people who are invested and staying there for years would definitely book, and the market would fall back or retrace. But that's still manageable as long as it's not showing negative bearish, completely bearish confirmed candles yet. In Banknifty, surprisingly, was breaking out last week, contrary to the Nifty, which was kind of forming red candles most of the days. So, but Banknifty, the weekly candle is showing a bullish wide range bullish candle, and there's a big breakout. It made the all-time high as well. It was kind of lagging behind the previous week. If you see, that formed an inside bar as well previous week. The daily candles we see in Nifty, we can see it was a triangulated 4-day week, and it was more resolved from bull traps and red candles. So I think what's happened in the Banknifty, it was flattish close. Nifty, sorry. But Banknifty, which is lagging behind, we can see that it was consistently breaking out in the last 4 days, except for Friday when it closed negative. Right? All the bands are showing its upside expansion with the bullish bias, and definitely indicating on the daily on short term that the price is going to move further up. But remember, Nifty is slightly away from that walking on the bands. It's slightly slid down. It could go and come back to the walking on the bands is like Banknifty right now. So all the bands definitely indicate short-term bullishness and further up moves. We'll come back to the support resistance level study later, but let's just wrap it up before that. So we have the all-time highs on the Nifty, but we had a bull trap and they have closed flat. That's what's going to be based on the Nifty, forming a potentially dangerous spinning top candle, which is calls out for caution. And it was a weekly flat close, but mostly close of 0.14. It's 33 point plus up with the spinning top after timing the bulls and creating the all-time highs and all that. But the price is still above the weekly exponential moving average. Remember that, and we had a 41% of rally from the last 1 year of March 2023. And it was a couple handles and flat pattern breakouts. It has been ever since then. And Banknifty After a rally of 34% of the monthly turnover, 11% of correction so far, had made a big breakout last 1,660 points, up 3.5% nearby. Positive close with a wide range bullish candle like what we have seen. That also has been doing the rally of cup and handle and flag pattern breakouts and all that, but slightly lagging behind now. That also has broken out to the top of the trend line chart. Daily candlesticks were called negative with flattish close on Nifty. Again, with almost all of the days it was flat, bull tractors kind of days, candlesticks in Nifty daily chart, short of tops. See, and finally the Friday, let's say 0.28% down, 66 points down, bull trap, bearish candle, but still above the 20 exponential moving average. Right? Banknifty on the other hand was breaking out, and it closed negative on the Friday alone. All of the days it was positive, and Friday just kind of 0.24%, just 100 points down, and formed a bull trap on Friday. So Friday was not that great for Banknifty also, but otherwise Banknifty was outperforming all through, but Nifty was just profit booking and then doing nothing all through the 4 days. And market did, so you can just conclude the market did manage to close higher with all-time highs, but it's heated up, it's at the very top. Profit booking can come in again, it's already coming in. Banknifty also reached the trend line top, so the question is now, is it going to wait till it goes and hits the 24,000 on the Nifty, or is it going to raise a bit before it takes out the 25k? Most likely the second option may be what could happen, because market is heated up, as I said. But Banknifty and the Nifty can further go up if that resistance that is seen right now at the top of the trend channel is getting broken out. It may come into a retracement of 24k, but yeah, it could be either way. On the bands, we have already seen this indicating that there is bullish bias, predicting more up most in the short term. Let's get back to the resistance support levels. Now, the first resistance is seen as 23,667, where the all-time highs are made. And after that, it can go as far as 24,000 at least with trend line channel top. So, first resistance will be 23,600 because it's a small rounding number. 23,667 because it's all-time high, then 23,700, 23,800, 23,900, and 24,000 may all have resistances, but we cannot say if it will happen for the next week's or monthly expiry. It could happen next month as well. Next series also. Now supports, the most major support would obviously come in at 23,500. If that is it managed to close about that, then 22,400 would be a support, which is the rounding number. Then 23,129 is where the major 20 exponential moving average support comes in. If that is breached, it could find some support at 23,000 because it's a big rounding number. The 22,800 can be support where 50 exponential moving average is coming on very close to that, 22,756. So 22,800, 22,750 is a confluence of, it's a major support zones. So there could be a bounce that can happen here and it traces to that. Now 23 Fibonacci retracement is coming as very close to 22,500, and 100 exponential moving average is at 22,370. That is also breached. 50 exponential 3 Fibonacci retracement would come in below the 22,000, but 22,000 is a big rounding number, so supports could come in there. 2200 exponential moving average is way down at 21,368, quite far away. So the more it's moving away from exponential moving average, more is the probability for retracement to come in. So it's even quite far from the 20 exponential moving average as well. So we'll have to cautiously see that. So that's the probable resistance for the Nifty. Coming to Banknifty, it has hit the all-time highs and it has hit the top of the trendline channel after making a cup and handle and then election drama and then full recovery to the top of all-time highs. Now at very close to the 52,000. So that's a major resistance. 51,957 is the all-time high previous close. And if 52,000 is taken out, the next resistance on charted trade framework 52,500, 53,000, 54,000, 55,000. All these uncharted territories were resistances outside. Downside for support will come in at rounding numbers at 51,000 first, and then very close by to that, you may find the 50 exponential Fibonacci extension It could come in a support zone, and then the major support is coming at near to 50,000 or 49,900, where the 200 where the 20 exponential moving average support is there. And also it confluences with 38.2 Fibonacci. Fibonacci extension level is also coming there. So 50,000 nearby or 49,900 would be a very good support zone where bonds can happen even if retracement comes and it breaches 51,000 if that is the case. And if that is also breached, then 49,000 is where the 50 exponential moving average support will come in, and breach of that will take you to confluence of 23 Fibonacci extension as well as 100 exponential moving average zone, which is coming at 48,100. Right, 200 exponential moving average is way down at 46,800 levels, so that may not happen that easy. Even if it goes down, it could find a lot of plenty of supports there. So that's Banknifty's Nifty support resistance levels. Let's have a look at the momentum and the trend of Nifty and the Banknifty on the weekly and the daily time frame. So you can clearly see that it's bullish momentum on the medium term, but short term, look at this. Both indices have no climb with the medium term as well as short term. On the daily charts also, the momentum is bullish, climbed the bullish. So momentum has really picked up last week in both indices and both time frames, but trend has, is still having trouble with the Nifty. Banknifty has already moved with the bullish trend, although it's having some falling strength for that trend bullishness in the weekly or the medium term, but overall both time frames it is more in the bullish zones. The rest of the Banknifty, Nifty is that is yet to happen. It's still in the medium term bearish zones, and it is having falling strength, so we have to be mindful of that fact. Trend crossover has to happen in the main Nifty index is what we're talking about. So that's about momentum, but yeah, volatility index, India wicks or fear and greed wicks. That's what wicks is about. Volatility index. It's 3% up once again. It's 13.8. Remember, we had big 60% crash and 125% spike before that, and all those crazy moves pre-election, once in 5 year event, big volatility movements we have seen. Now it has fallen down back to the low volatility regime, and then small spike as last week of 3%. Now blind volatility, you realize volatility difference and all is not that favorable, because at minus 58 it should be at least plus 58 for it to be really in favor of option selling. But IB percentile wise also it's not that great, but it's 61 IB percentile. Long unwinding is the futures OI showing on the Nifty and the Banknifty indices on the Friday, but that's bearish mostly. Right? So futures OI is not that encouraging to see. But let's try to understand the operators for the June 27 and 26th monthly expiries for Nifty and the Banknifty. So PCL is not bullish enough in the case of Nifty, right? But it's above 1 and it's bullish in the case of Banknifty. So Banknifty is there also. So if you look at the levels, you can see that it's a 1,000 point range for the Nifty, where the highest potential call writing is seen 23,000 and 24,000. Second highest support is seen at 23,500, and that's the same place where the second highest resistance call writing is also seen. With the Banknifty, the range is again wide of 51,000 and 52,000, where the highest potential call writing is seen. Second level is 50,500 and 50,000, again 2,000 points there. So wide range moves. I see wicks and market is heated up at the very top. So levels seems to be wider, but we have still several days more for the monthly expansion coming on next Thursday. PCR and futures we already saw. Just to wrap it up, if you see, we can conclude that not much of clues coming out clearly on the options in the futures OI. But futures OI is giving it's a priorly delta is showing that it's long on white, which is bearish. While the PCR is Banknifty is bullish and Nifty is not yet bullish, but it's on borderline. So overall, it's not giving too much of a clue of bearishness, neither is giving it too much of a view of bullishness. Right? Moving ahead, if you try to understand the sectoral indices, it's got slightly here on sectorial, but it's not moved to the bear zones anymore. So it's hit from bullish to sideways max. That's all that has happened. But ideas recover of 1.8%, nearly 2%. But still have to wait because it's not bullish momentum yet on the medium term or the weekly charts. right? So what happened on the weekly charts, let's see. Candles could be indicators of reversals. Since it's the very top, it could be indicated reversal to the downside also, depending on which higher low is breached. Metal also closed 0.5% up, but formed indecisive logic candle. The movement sideways and movement is, although meaning the bullish, you'll have to just wait for before taking the long positions. So that's the second sector that needs to be questioned. Auto sector is a sector this still could be good taking portions because bullish is still in the medium term and the long term, and it's 2.6% down last week. It's a bearish bull trap candlestick that's seen, but even though it's down, still the bullishness is not died out. Pharma 1.85% down, but still you could take. No, we can't. Pharma is now out of the bull zones and sideways momentum in the case of short term, so you'll have to stay out of pharma if you're taking long positions at this point, right? But medium term it's still bullish, although they're showing this trends. FMCG is 2.1%, but still you could be take. Also you can't take. You need to wait before taking because bullishness is gone now. Momentum is sideways and falling on both medium term and short term. So now it's only the auto sector. Only auto sector and realty sector is left. IT, metal, pharma, FMCG are sideways, but none of them are peers. So it's just a small retracement we'll have to see. So realty also is flattish, dodgy. So industry is seen two. Metal and realty both had dodgy weekly candles. Right? In the case of realty, bullish momentum is maintained at least. So you could think of taking long position of the realty sector and the auto sector, even though auto got hit back to 1.5% last week. Still, it's remaining the bullishness. So the sectors are all sideways, as I said before. Let's look at the chart. Right, IT sector at the top, copper handle breakout is begun, but sees resistance. Momentum is still there to climb over the RSI 60 on the moment. Breakout Nifty metal at the top of the trend channel, consolidating there. Momentum is bullish, heated up. Auto index at the very top of the trend channel, heated up. Momentum is absolutely bullish. Pharma breakout on the way, but got hit back, pull back, but momentum absolute bullish. FMCG consolidation breakout, didn't buckle, retracing once again, momentum slipping to sideways. Hopefully it will consolidate further before moving to top of the channel. We'll have to wait. Realty index at the very top, heated up, bullish momentum, bullish trend, everything. Top of the channel, it's heated up and then flying because of infra push from low current. Index heavyweight, there's a heavy shake stocks that contribute max with the prices. We'll analyze HDFC Bank, and Reliances, and ICICI Banks, and Infosys, and things like that. HDFC Bank is doing good, but still it is coming very closer to the previous place where it met the resistance multiple times in the last 2 years or 3 years. But interestingly and positively, it has climbed in the bull zones. Volumes are really good. Trend is also good. So, medium term, HDFC Bank momentum is climbed into the bull zones, which is really good. That's what is pushing the Banknifty up 1,600 points in a week or previous week. Reliance consolidating, flag purple possibilities there. Momentum is slipping between sideways in these and the other side about 60 bullish zones. The bank is also hovering around the bull zones RSI 60, but consolidating before it can make one big breakout to the top of the trend channel. So bullishness is there at the borderline. Bullishness you can say on both HDFC Bank and Reliance and HDFC Bank. So heavyweights across, it has done well because last week Fyers were buyers. We'll come to see that next. So few slides. So it was similarity. Front equal and sideways, maintaining sideways, still on bullish. Correct? Sideways as always. Right? But it had to recover from the several weeks before fall, and then it has climbed back to that same consolidation. So ITC was in the verge of a breakout from a flag pattern, but it didn't work out. Slipped to sideways and then got met with resistance. Probably it may need to wait some retracement before it can do that. But yeah, sideways. Gotta wait patiently. So these three other bulls, others are sideways momentum. None of them are bearish. This is again positive, just like all the sector days have got hit back, but and some of them are falling sideways and very few are both taking long term, but with respect to the momentum on the both time frames. But still, none of them are bear zones from the momentum perspective of medium term. If you are trying to understand the mid-cap and small cap, they are at all-time highs and breaking out and then extremely heated up, right? So momentum trend, everything is bullish. So across a broader sector breakout is what is happening, not just in the main index alone. Fyers have been buying 9,100 crores. This for the second week, we believe that they have been doing this buying. Small buying, not great, but yeah, their buying is positive because they have been selling, nothing but selling since several years now. And this, as usual, once again bought 9579, more than what Fyers had bought. So, overall, net went, it's big positive, and both the institutions were net buyers. Net longs on the derivative side from the Fyers also moved flat last week. Yeah, you can see the data here. You can see the charts, but FNO for the Fyers are not bullish about. Except the futures, they're not bullish on the indices, right? They are all indecisive with respect to the DAs and all that. You can see that. So moving ahead, if you try to understand the global markets, that's the US markets primarily, the commodities of gold, oil, and the US INR currency. Basically, if you study that, you can see that the dollar slightly moved up, close green, about 5.83. On the side is rising up. US INR is close flat. It's in 3.54. Still remained to be the weakest point in rupee. It was sideways and then rising further up. It had been centrally managed by central banks since long, and neither is it cooling off below the 83, nor it is breaking out to the 84. That's what is happening with respect to the US dollar. And US dollar has been consolidating and not really breaking out of the cup and handle, consolidating within range, but it's green there as well. So overall, no big impact news there with respect to the currency. Crude oil on the has done some reversal and then once again seems to be heading up to break out from that parallel channel, which will not be good news if it happens, but that's what happened. But momentum is still sideways, so that can be a relief for now. It's above 80. It's 80.52, that's 2.3, so nearly 3% up from last week. So crude oil has not been positive for emerging market like ours, or importing country like ours, but oil marketing companies may be stock-wise benefiting. So we have to watch, keep a close watch at this trend line if it is breaking out or not. The gold, after having made an all-time high for several weeks, it has been consolidated in a wide range. And neither is it's kind of a flag pattern which can break out of its consolidation. Don't know when that will happen, but it's still remaining at the top. Momentum is bullish, and last week it was 0.5% down, right? Still very close to the all-time highs after that 26% big move from the swing lows. In the US market, if you see, you can see Dow Jones is green, Nasdaq is green, S&P 500 is all greens, not big greens, but green. 1.5% on Dow Jones, Nasdaq flattish but green, and more than 0.5% up, more than S&P 500. Right, so model also is bullish. Global markets, just wrap it up. You see, US markets are green, which is positive. Crude oil is rising, which is giving a call for a caution or watch out there. Gold is doing nothing, but at least it's not giving clues as long as it's not rising up. And US dollar is rising up and rupee is weak as before. So two externals, two stock picks basically. One is Granules, it's a pharma company, it's a cup and handle. And good RiskReward trades can happen with tight stop losses if that pattern breaks out. Momentum, volumes, and trend are in the bull zones. Tech Mahindra is the IT stock. It had given beautiful consolidation breakout and it's moving in a parallel channel beautifully, and there is some scope for it to bring out of that parallel channel and then move further up. Volumes are good. Trend is also just climbing the bull zone for the medium term, and RSI momentum also is looking good. Right? Two stock picks, Granules in there from the pharma sector and Tech Mahindra from the IT sector. Sorry. Another actionable is the calendar bear call spread, where we are selling 23,500 calls and buying hedge for the next week. No, not the upcoming week, next week's weeks. We are buying 23,500 itself That way it's a diagonal control spread, right? It's completely hedged. Probably not that great, but okay. If you exit before the expiry, one day before the expiry, 1 or 2% target profit, you can get a very good break-even range of 23,300 and 23,755. As long as it remains in that, it's worth taking a bet, right? And exit, and if it is breached, do nothing, just exit and bear the loss. Basically, marginal comes a little bit less. It's from one lot, you can take as many loss as you like, as being the risk appetite and the capital, right? So that's weekly options bear call calendar spread that you are seeing here. Just to wrap it up, market hit all-time highs, but bank index really outperformed, while the Nifty was struggling to move further up, due to the profit bookings, and in fact trapped the bulls. But Banknifty was a hero last week, 1,660 points breakout move. Both indices are about 20 exponential moving average with a correction of 10 to 11%, and 34 and 44% is the rally since last 1 year from March 2023. Couple of handles and multiple breakouts, right? 41% rally on Nifty. Can you believe that? Let's try to bucket what things are in favor of the bulls, what is in favor of the bears. So bullish momentum is there now for both the indices, including Banknifty, which is positive, and its price is about 20 exponential moving average. Again, positive for the bull side. The average is low, so that way it's fine. Only Demat is saying upside expansion, which is again positive. Sectoral indices, heavy stocks, and none of them are in the bear zone side, either sideways or bullish. Close market is green, is again mid cap, small cap, green, all time highs and very top. Across a broad sector market up more is what you're seeing, not just Nifty 50. PCR bullishness is there on the Banknifty, which is in favor. Now, this has to come down here, sorry. So, what's in favor of the bears? That's what I'm trying to see. So, when it comes to the bears, Nifty is set to turn the bullish trend, right? It's Demat Account still made it in the short term. The Banknifty has already done that. Price that reversed since the top of the trend channel. If you look at there is just taking out this. It's not Drawdowns. It's flattish close, but not exactly doji. Spinning top actually. Now, this is also around. Banknifty PCR is actually bullish, so I have to take that also. Sorry about that. It was last week's update. If I forgot to update. Otherwise, we're overall into buying more this week, but still I'm putting in favor of bears because they have been sellers since long. No, I don't get the real feel that they come back as big buyers yet. So the top of the trend channel is there. No, so retracement comments, some pullbacks may be required for it to move further to 24k. No, red candles on the Nifty are indicating that, and the fact that the Banknifty has hit the top of the trend channel is also indicating that. So we have to exercise some caution. And Nifty is not fully off. That is also left over from last week's. Nifty did recover last week, no? Did recover. The last point is long unwinding. Long unwinding is something that is futures high showing on Friday. So of course, because long unwinding is bearish in nature. Right. So market basically has hit all-time highs and staying maintaining there. But no, it ended flattish. And flattish close means indecisiveness, and spinning top is adding some fear factor also there. And we have the trend line at the top of the channel. Bank index really outperformed, that gives hope, but no, that also has hit the top of the trend line channel. So the all eyes will be for the budget news that flows in the next month. And until then, there's a chance that some retracements, consolidations, all this could happen. So the caution has always been exercised. No, when we are playing derivatives explicitly. Touch up has to be until the budget is coming. Technically, is also maintaining this price at the top, but which is easing also. It's all fine, but there is Momentum is rising, but trend is not fully closed over. So from my market view, considering the profit booking and being at the very top at big rally at the top, heated up, I think that the charts may be, especially the Nifty chart, Nifty candlesticks may be telling that you have to be slightly cautious, and I'm mildly bearish about it. That's my market view for the next week, right? So global news and wars and COVID and interest rate hikes and inflation and all these things are properties for black swan events that can come in anytime. So always have portfolio level hedges as well along with your positional hedges on the derivative options and all this. Now this 22,500 and 24,000 is made on the Nifty. Then that's what I'm looking for the next week. It's a wide range. If it is correcting, it should not correct more than 2500. Then we have trouble. So now 24,000 is not that an easy target. Let me try to kiss that. So 49,000 is a possibility for retracement. If the market is at 51,000, 2,000 points above. But still, if it is pulled back, it can try to kiss the 49,000. On the upside, 52 may be a good target if the market is breaking out of that condition zone. Now, as long as this 22,500 is made on the Nifty and 50,000 is made on the Banknifty, then we can hope for the next leg of that to happen from there. Otherwise, it indicates that we are set for a correction. So always have hedges if you're carrying forward positions in derivatives or options, and have portfolio level just productive investments. You can make as well strategies and get regular rental income. Check out the playlist for more videos which are other than the weekend analysis. Right? Check out the playlist from my YouTube channel. That's all I have. If you think it helped you somewhere, subscribe and then share it to friends. Put in feedback, comments, and all these things if you wish. I'm also present in other social media channels. If you want to check out that places as well, but I may be active more than YouTube. Right? Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.